Welcome everybody to GROWL Connex. My name is Greg Olson and I'm the founder and CEO of GROWL Agency. We're a marketing and technology company and we are here to help clients drive demand. First, for all the participants that are calling in or in the call, we're going to have you on silent, and please use the chat functionality to ask any questions of our esteemed panel, which I'll introduce here. America has been shut down by this silent enemy. Businesses now need to adapt to this unknown economy. Today, we'll be discussing current funding and potential future resources. We are honored to have an esteemed panel. Let me do a very quick introduction. We have from the Squire Patton Boggs team, James Eklund and Cole Wist, and from their DC office, we have Brandon Roman. We also have Delaney Keating. She is the director of Startup Colorado. And we're very lucky to have someone that's certainly very busy and putting in many long hours, Dan Nordberg of the SBA. Today, businesses need information faster than ever for what is happening today, but also what's going to be happening in the future. Everybody, thank you very much for being on the show today. With that, I want to kind of turn it over to kind of James and Cole, who we've had many discussions about what's been going on. And, a little bit I'd like to know, why Squire Patton Boggs?
Yeah, well, hey, thank you, Greg. Really appreciate the opportunity to have this conversation. It couldn't be more timely. Cole Wist and I both have deep roots in rural Colorado. I'm a fifth generation Coloradan from the Western Slope. Cole's family goes way back, maybe further in Paonia. We're both kind of black sheep because we live in Denver now. We also both just so happen to be lawyers at a big law firm, Squire Patton Boggs, 45 offices in 20 countries. And one of our largest offices happens to be in Washington, D.C. So our colleagues like Brandon Roman, who's on this webinar, have their finger on the pulse of the federal response and recovery effort. Nicole and I got to comparing notes about how this was impacting our extended families and our friends and rural communities that we both care about. And we agreed that by virtue of our firm, we had some access to very important information that would benefit folks that are struggling through this crisis. Cole reached out to Dan Nordberg, who, as you said, is the Small Business Administration's regional administrator for Colorado, but also Wyoming, Utah, Montana, North and South Dakota. It's a big deal he's here, and I know Dan jumped at the chance to have a conversation about what's happening in real time in rural Colorado, since his agency is really at the fore of our nation's response to the crisis. So I know we lose Dan before any of the other panelists have to drop off. So maybe it's best if it's all right with you, Cole, for us to flip it to him and start off with maybe a conversation about what programming is going on with the SBA.
Thank you.
So just by way of a brief introduction for Dan, since he's humble and wouldn't toot his own horn, Dan is a Colorado native, grew up in Greenwood Village. Cherry Creek High School graduate. He also attended Colorado State. I had the privilege of serving with Dan in the Colorado House of Representatives. Dan left us in 2017 when he was appointed by the president to serve in the administration as regional administrator of the SBA. And I can't think of a better person that I would rather have in this position at this time. As you'll be able to see from Dan today, he's laser focused on working with small businesses, and it's my honor to introduce him to you. So take it away, Dan.
Well, thanks. Thank you, Cole. I appreciate that really kind introduction, and appreciate what Squire Patton Boggs and what you guys are doing to help bring this focus and get the word out, as well as all the other panelists, because where we stand now and how we recover from this, it really is an all hands on deck situation. And it's one where we're going to have to partner together to support the small business community in order to get through this. I think with my time, I just wanted to give a brief overview for some of those who are listening about the Paycheck Protection Program, as well as our Economic Injury Disaster Loan, and then just give a brief update as to where things stand now. But as it pertains to the Paycheck Protection Program, it's really important that folks understand the eligibility and that this program is meant for employee retention. It is a lifeline for small businesses to ensure that they're able to retain the employees that I know they are all working so hard to keep on the payroll, but are struggling obviously during this time. So briefly, the program is for small businesses with less than 500 employees, including sole proprietorships, independent contractors, as well as other self-employed individuals. So the gig economy is certainly taken into account with this legislation. Also notable, private 501c3 nonprofit organizations are eligible, and that includes places of worship as well as religious nonprofits. So that was guidance that came out this past weekend, important for many of your communities to know about. Also eligible are 501c19 veterans organizations, as well as tribal business concerns. Now, it's important to note that businesses in certain industries may have more than 500 employees, may be eligible if they have more than 500 employees, if they meet what's known as an SBA size standard. And that's done based on certain industry that allows for eligibility, that if you adhere to some of the requirements, you could in fact have up to 1,500 employees, for instance, if you're in the manufacturing industry, and still be considered eligible if you meet that size standard requirement. It gets a little technical, and that's one we'll probably need to talk about later on, but it's important to keep in mind as people are looking at eligibility for their business, that they could in fact be eligible even if they have more than 500 employees. Another notable exception to that is especially for the hospitality and food industry. This is one where we are talking to a lot of business owners on, and several business owners own multiple restaurants. In the hospitality and food industry, if you have more than one location, and you are eligible if you have more than one location, as long as they don't have more than 500 employees per physical location. So to break that down, you could have a restaurant owner with 4 restaurants and 200 employees at each of those locations, and that would be acceptable. So you'd have 800 net employees, you'd be above the cap, but again, as long as you don't have 500 employees per physical location, you'd still be eligible. In terms of maximum loan amount, how do you get these loans? What is the amount derived in terms of what your business would get? It is determined based on a formula of your average monthly payroll from the year prior multiplied by 2.5. So it's really, that's the formula that goes by. The cap on that is $10 million. So whatever is the lesser amount, in most cases, again, it will be your average monthly payroll from the year prior multiplied by 2.5. Since this is an employee retention measure, this loan has some very prescriptive uses as to what you can use it for. That includes payroll support, employee salaries, paid sick or medical leave, insurance premiums, mortgage, rent, and utility payments. It's important to note that this loan is not a direct SBA loan. The interface for this is with your lender. So any insured bank, credit union, or farm credit institution are eligible to do these loans. So that's important. You can leverage the existing relationship you have with either the lender you work with currently or another lender in your community. We have given authority to these lenders to make determinations on creditworthiness without having to go through some of the usual channels for SBA lending. So if you're familiar with SBA loans, those processes are not in place for this. For eligibility purposes, instead of requiring lenders to determine repayment ability, which is really not possible during this crisis, we are just asking the borrower to certify that whether a business was that they were operational on February 15th, 2020, and had employees for whom it paid salaries and payroll taxes, as well as sign a statement saying that the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. There are no borrower or lender fees for participation in this program. There are no credit elsewhere standards. There is no collateral or personal guarantee requirement, and borrowers will also not be charged any prepayment fees. The maturity of the loan is 2 years. The interest rate is 1%, and all of these loans are guaranteed by the federal government. Now, the primary function of the program is loan forgiveness, and the statute establishes that the borrower shall be eligible for loan forgiveness equal to the amount spent by the borrower during the 8-week period after the origination date of the loan on payroll costs incurred as compared to the year prior. So in essence, there will be a year-to-year comparison of your average FTE and payroll, and your loan forgiveness will be proportionate to maintaining employees and wages. The amount forgiven will be reduced proportionally by any reduction in employees retained compared to the prior year, and reduced by the reduction in pay of any employee beyond 25% of the prior year compensation. Last but not least, 75% of the loan must be used on payroll in order to receive the full loan forgiveness. So that does allow for the remaining 25%, which can be used for mortgage, rent, and utility. So that's the Paycheck Protection Program. I know I threw a lot out there. I do want to just briefly cover the Economic Injury Disaster Loan Program, which is another working capital program that can help small business owners perhaps bridge the gap with some of their fixed debts during this time. The Economic Injury Disaster Loan Program offers up to $2 million in assistance. However, it's important to note that right now we have millions of applicants for this program. And truth be told, as we move forward, we're going to probably have to wait for Congress to appropriate some additional funding just because of the volume of applicants that we do have. If you're in the queue, we're making sure that you have the funds available and that you will get that. But for moving forward, especially for some of those maybe larger small businesses that may be interested in getting up to that $2 million, we're going to have to wait and see as to what funding comes down from Congress before we discuss all that. These loans, unlike the Paycheck Protection Program, they can be used for fixed debts, payroll, accounts payable, and other bills that could not be used because of the disaster's impact. So whereas the Paycheck Protection Program is really focused on employee retention, this is more of a working capital type loan that would allow you to pay some of those fixed debts that you would have otherwise been able to pay had it not been for coronavirus. The interest rate is 3.75%, and the interest rate for nonprofits, so 501c3 nonprofits are also eligible for this, is 2.75%. In terms of repayment, the term goes out to 30 years. It is important to note that there is a component of this called EIDL Advance. That is the acronym. So Economic Injury Disaster Loan Advance, where you are eligible to receive up to $10,000 for employees that you have. It's based on a formula where you can receive up to $10,000. I think the formula it stands now is for consideration, it'd be $1,000 per employee. That amount up to $10,000 up to that point is forgivable. So if you do take on additional funds from the economic injury loan, it would more or less be subtracted from the total amount. So obviously a lot of moving pieces over the past 3 weeks, whether it's the economic injury loan or it's the Paycheck Protection Program. In terms of definitions, eligibility, some of those things are already out there with our interim final rule, and guidance is continuing to be worked on for lenders to help implement this program. But it's important to keep in context, this is one of the largest economic recovery efforts that our country has ever done. And so as such, more and more guidance will be forthcoming. More and more definitions and specifics as to eligibility are going to be also forthcoming, but it is going to be probably done in a patchwork approach. So just ask for your continued patience. We certainly, again, appreciate the partnership with everyone and, look forward to answering any question at the appropriate time. So thank you again for having me.
Hey, thank you, Dan. That's great. I want to make sure everybody's off mute, James, if you might be. And there you go. Let's see. And thank you, Dan, for that. I want to make sure, I appreciate those comments about, it is a lot to weed through, and I've been on a lot of conversations with business owners. We're all trying to figure it out. And I know one thing, we're seeing kind of there's a lot of confusion between the payroll protection and the EIDL loans and what can you take and not take. Do you have any guidance on that? Like what you would ask businesses to do first, because it is a lot of paperwork and there's a lot of emotion too because of what's happening. So I don't know if there's any guidance you have on what you say, go for your payroll protection or go for both, or is there any guidance on that?
Yeah, great question. And it is important for business owners to understand you can utilize on parallel tracks both products. However, the statute is very clear and the guidance in the interim final rule is clear. They cannot be used for the same purpose. So for those business owners that are applying for payroll protection program, we have to keep in mind that that is obviously focused on employee retention and payroll costs. If you do take out an economic injury disaster loan, nothing precludes you from using those funds to help pay for payroll either. But where you can get in trouble is if you try and use both of those products for the same purpose. So you could, in theory, use payroll protection for payroll costs, but then also use the economic injury disaster loan to maybe do some of your supply chain costs, other fixed debts that you really probably would have been able to pay had it not been for the impact of the virus. So
that's good information. And before I go to James, and I just wanted to make sure I bring Delaney into this, because her and I have had a lot of conversations around community banks and trying to get people up to speed. I don't know, Delaney, do you have any comments on that? I mean, I don't want to speak out of tune from our conversations.
Yeah, no, and I don't want to derail the conversation too much so that we stay granular enough to really benefit entrepreneurs. But I think a really emerging question as somebody who works deeply in rural development is at this point, as we watch continued rollout and I think some of the certain sort of frustrations and disappointment that these PPP loans weren't as quickly available in our rural communities based on various dynamics as they have been through some of the major banks. If we look at that community bank and some of those dynamics, is really at a high level if we need to start considering if policies should consider two-factor deployment for urban and rural to create a more level playing field based on the variable dynamics of each. Because the pacing, the time, and the structure is different, and kind of the race to the finish line, I think, became very stressful for everything from the community bank to the entrepreneur. So it's a real high-level comment. I don't expect you to certainly have an answer today, Dan, but I think it is a really interesting consideration and something we see in our work in little ways and in big ways, as much as we want to bridge that rural-urban divide, that things are just different, whether it's in terms of communications with entrepreneurs, the things they need, their goals, things like time, delivery, supply chain, all of it's variables. So it's just something I think is worth us starting to really look at more deeply.
Yeah, I appreciate that comment. I just wanted to, and then we'll get back to, I know we're having patience, but I see that in rural Colorado too, Dan, about, just banks not really ready or trying to understand guidance. And I know it's only been 3 weeks. It has seemed longer to me. Maybe it's because we're all working from home and it seems like we're always on now and on screen. So, that's just something I'm sure I'm sure they're looking at, but I don't know if you have any comments on that or any kind of guidance. But I know a lot of community banks are just struggling, and I have a lot of people I know in that. And my ask is they just be patient, and I know we're going to get there.
I think it's a great conversation point. I really appreciate Delaney bringing it up, because if you look at the legislation itself, there's what's known as a sense of the Senate that was included from the United States Senate, that the focus of this really does need to be on underserved markets. So whether that's a rural area or an urban hub where there might be banking deserts, we have to be cognizant of that. And we have to work together to reach those markets, especially with the implementation of this program. So I can tell you, we are working diligently with the state of Colorado. We're working with the Independent Bankers of Colorado, which is the community bank trade organization here in the state, as well as the Colorado Bankers Association, the Credit Union Association, to really try and address those concerns. I will tell you, in terms of implementation, again, this product came online, a $349 billion loan product in 7 days. And I think for many lenders, especially whether it was a large lender or a community bank, they are risk-averse organizations, and rightfully so. They want to have all the T's crossed, the I's dotted. And so we are continuing to roll things out as fast as we can, whether that be guidance on promissory notes or how lenders close these deals. Some lenders are taking it in their own interpretation and moving forward with processing. Others are waiting until more guidance comes out. And both, I think, are fair positions. But we recognize that divide, and we definitely want to make sure rural markets are best served. And I think over the coming week, as we improve our processes and are able to get more and more clarification on some of that, I think it will kind of break the bottleneck. So it's something we need to be cognizant of, and I hope we can work together to continue to bridge that divide, like you mentioned, Delaney.
Thank you for that. I'm going to turn it back over to our Squire Patton and Boggs team and let them take it from here too, because I know they have a lot of discussions they're having. And I do have a couple of questions coming in that I want to catch you, Dan, before you leave, sign off. But I'll let it take it over to you, James and Cole.
Well, I think this is a great segue. Brandon has been on the front lines for our firm in Washington working on these various issues. I think he has some helpful insight to provide some at least some legislative context and some policy context for where we are and where we might be going. And as a transition, Brandon may have a question or comment directly to Dan. So I'll just leave it to you, Brandon, to kind of drive the discussion from here, but appreciate you taking time out of your very busy schedule to join us this morning.
I'm happy to do it. And Dan, it's a pleasure to meet you and appreciate the good work you are doing. As I can only imagine from the work we are doing here with agencies and trying to relay information to clients, there is on a continual basis stuff coming out, just given the expedited nature to respond to COVID-19. So appreciate the good work and know it's a lot. So thank you for that. I do have a question for you, one in particular, kind of, I will go, as I know you have to leave, so I'll level set this later, but kind of on a looking forward basis. Obviously, there was $350 billion that were provided to the SBA through the Paycheck Protection Program under the CARES Act. I know as of this morning, it seems as about a third of that funding has already been allocated. Could you speak a little bit more, I guess, on two specific components of that? One, how much longer you anticipate that funding will last, especially given the influx today of the sole proprietors and the independent contractors into that space. And then two, if you could speak to the actual the funding being made available to the individual businesses, if that timeline's determined more sort of on the processing of the banks or the financial institutions, or kind of what we can expect there in terms of actually seeing those funds dispersed.
Yeah, great question, Brandon. So let me, in terms of, I don't have the updated numbers from today, but as of yesterday, there had been over 500,000 loans processed, valued at $130 billion from over 4,000 lenders. So we are seeing broad participation in the program. Where there is maybe a dynamic that needs to discuss is disbursement of those funds. What does the time frame for that look like? That's where it is. The bank is going to have to look at their own internal processes. We have been challenged, I think, from SBA in providing the clarification as it pertains to some of the closing processes for lenders. Some lenders have taken that upon themselves in their interpretation to go ahead and disperse the funds. And we do have a number of instances that the day after the program opened, they were dispersing funds. We also have some banks right now that will probably start doing so this weekend or early next week. So there has been a divide as it comes to that. It's really up to the interpretation of the bank and what they feel comfortable doing in terms of their closing process. And I certainly respect either position. I'm not trying to throw any ill will towards them at all. It's a tough situation, and we're all trying to disseminate the guidance as fast as we can. The program is funded up to $349 billion. Obviously, we've gone through a great deal of that if we're already at $130 billion as of yesterday. I can't speak as to what Congress will do, but there was a conversation yesterday that the Senate might appropriate an additional $250 billion towards the program to alleviate the concerns of small business owners. I think those conversations between the respective parties are ongoing. So I imagine we'll see more conversation on that next week. But I can just tell you, I think this is truly a bipartisan at the forefront of everyone's mind. They want to give comfort and support to the small business owner. And, I'm hopeful that they'll be able to appropriate additional funds so that we can provide the resources that we need to get the small business owners the assistance they need.
Great. And one additional follow-up on that, and that's very helpful. Thank you. Again, we talk about the evolving nature of the needs and the programs, and that there's been various rounds, as you mentioned, kind of patchworks of guidance that have come out through the SBA and Treasury as part of this. And we saw yesterday the Federal Reserve set up a lending facility to kind of help support this Paycheck Protection Program. Is there anything in particular you kind of have in mind that might be coming out in terms of guidance or timing next to kind of help facilitate additional financial institutions to get involved and provide further clarity? I know that, at least in the beginning, there was some vague components of it that people were, in terms of lending, they were a little bit hesitant to get involved. Anything that you can provide to us, have on the agenda that might be coming out in terms of additional guidance as of today?
Yeah, as of today, so famous last words, but my understanding is that We're going to get additional guidance on some of the closing processes. So I think that will be very helpful for lenders as they do their promissory notes and things of that nature to close out these deals so that they can fund the small businesses with these PPP loans. I also think that there is a struggle to some degree on eligibility and definitions and what groups are exactly included and what maybe the parameters look like. You know, for instance, agricultural related industries, we do know that there is going to be broad inclusion of those industries. However, what's the ultimate determination in terms of eligibility? Are we adhering to the legislative intent of Congress? And I can tell you all those conversations are ongoing round the clock, day after day. So it's important for us that we make sure we have the intent correct and also that we get the right information out to everyone, because there has been, unfortunately, a good deal of misinformation as it pertains to all of those aforementioned issues. So it's around the clock. I don't foresee that stopping. And unfortunately, information is rolling out, but I do know that for closing processes, that is certainly a priority for everyone at SBA as well as Treasury, as well as some of those definitions and guidance for certain industries. We definitely want to get that out there as well.
Hey, let me ask a quick question. I'm watching the Q&A coming in here, Dan. We have a quick question. I started, we have someone that is on the, they started a new LLC business November 12th and have yet filed any quarterly taxes. How does this affect me from being eligible? Can you answer around that or give some guidance to that listener?
Yeah. So, I mean, if they were in effect in November, you said November 12th was their date.
November 12th was the date they haven't, of course, filed any quarterlies yet.
Yeah. So, you know, some of those, and if you look at the loan forgiveness portion of the interim final rule, there is still some details outstanding as to how that's going to look for certain circumstances. We do know that they would be eligible because businesses under a year old are eligible as long as they were in effect before February 15th. So we have to probably wait for certain guidance for them as to how the equation would look like. We do have on the interim final rule, which is on SBA.gov, certain formulas that are laid out as to how a business would do this that has not been in effect for a full year. I don't have the formula off the top, but yeah, I do believe that's in the interim final rule. And I know additional guidance will be forthcoming on some of those.
Sure. And I know be patient is what I'm telling people. You know, there's a lot of, like I said, emotion, and we've never been through anything like this before. So again, thank you for that answer. I'm going to turn it back over to the team.
Great.
I just want to, if I can really quick, one, Dan, thanks for letting me put you on the spot. But I think as we think about the listeners listening in on this, and we hear the complexity of these programs from the government to the bankers to the small businesses, I think something that might help everyone right now is when we hear talk of patience in the middle of a crisis, it sounds like an oxymoron. So we really have to toe that line. And I think for any entrepreneurs on the call is make sure to, you know, as we look at the value of our community banks and rural communities, those bank presidents and executives and lenders are really hustling hard right now. And they're afraid that they're going to lose you as their clients if you go with a major lender to get access to this funding faster. And that's their biggest fear, and they value that long-term relationship. So in terms of that patience and looking at that stress point for those banks, I think it's just important to keep in mind. And those are the conversations I've had with bankers are probably some of the most stressed conversations I've had throughout this entire process to date. So go love on your local banker and let them know that you're with them. And I think the more that we can wait out as long as we can and give them that opportunity to serve you. So I just wanted to back you up with that, Dan.
Thanks, Delaney.
Yeah. No, Delaney, I just real quick on that. These bankers are at the front lines and they are working diligently to try and make sure that they disseminate the right information to you, as well as get you your loan out as fast as possible. So people need to know that. I mean, this is a partnership. Our friends in the Community Banks Association and the larger banks, from everybody, I truly believe that everyone feels a higher purpose for this and is working very hard. And so I appreciate you saying that, Delaney. And to the extent that there are problems with banks maybe accessing our systems or processes, you know, I can't speak to as to when certain rules will come out from DC, but if there are things within our system that we can be of assistance with, we need to know that. So I would appreciate any referrals on that front.
Excellent. Well, Dan, thank you so much for your time and all the really good information that you were able to convey just now, and references to the website. I know, Greg, we're going to be pushing out links to the different websites that were mentioned on the webinar. So if I know we may be losing you to another webinar, and again, thank you, Dan, for your help. I'll let Cole wrap it up if there's anything that.
We can stay on as a group. I know Dan has to wrap up with that, and we can kind of stay on. I'd love to hear a little bit more from Brandon on some of the things that are what he's been looking at, and some guidance on that. And hopefully we can bring Dan back on a future event to give us some more status and guidance. And Dan, I really do appreciate all the hard work you and your team are doing.
Thank you all. Appreciate it. Likewise. So thanks again for having me.
Hey, Dan, on a personal note, stay safe, be well, and give my best to your family.
Hey, likewise. Thanks, Cole. Appreciate it, man. All right, take care.
Thanks, Brandon. Is it a good time for you to, maybe you can pull on any loose threads that might have been created with our last conversation there, but it'd be great to hear from you. I know you've got your finger on the pulse, boots on the ground, all the metaphors in DC, and you know, we've got stuff coming out from the Federal Reserve. There's a lot happening, and maybe you could distill that to the best of your ability.
Yeah, I'm happy to do it. You know, it's an ever-changing landscape here in DC. We do these daily reports for our clients, and it seems like on a daily basis, it's a different story of what to expect next. And just again, we try to say it's just like the virus is evolving. The response, both healthcare-wise, but also economic, has been evolving. And one of the issues, and I'll get to this, and it's something that Delaney mentioned earlier, is regarding the community banking issue with the PPP program and accessibility of funding and processing loans because of some of the programs that are required. So I'll hit on that, Delaney, and then would love your feedback there. So maybe just let me level set it quickly as kind of where we are, so I can talk about where we're going. So we've just passed the third coronavirus response bill. The first one, which was passed on March 6th, was just emergency funding for government agency response. The second one, which is called the Family First Coronavirus Response Act, was passed on March 18th, and it included an array of response policies regarding unemployment benefits, refundable tax credits and emergency leave, Medicare, matching funding for Medicare, expanding the availability of COVID testing, various food safety regulations and whatnot, just to kind of do an immediate response. The last bill that passed, the CARES Act, is the largest economic stimulus bill that we've seen in our country's history. It was $2 trillion, all unpaid for largely, and it includes an array of programs. So beyond what we've talked about today, the Paycheck Protection Program, or the PPP, in the Emergency Injury Disaster Loan Program, the EIDL, beyond those SBA programs, there's an array of other programs and incentives and economic stimulus measures included. Again, they expanded with $250 billion worth of uninsurance benefits, $301 billion direct payments to individual households, $150 billion to states and territories, and then $500 billion for loans, direct lending, indirect lending, and also financial support from the Treasury Department. And then additional $350 billion in additional appropriations for government agencies. So that was enacted and signed into law on the 27th. And since then, as no surprise, again, as I mentioned, the evolving need, they've turned quickly to look at what is next. What is the next response that's required? Initially, Speaker Pelosi began pushing a large comprehensive package that was going to include green energy, infrastructure, and also additional pieces that expanded upon the CARES Act. There was an acceptance almost of that by President Trump in a way in the beginning, because he wants to move forward with infrastructure. He feels that's something he's wanted to do since the beginning of his presidency. And then I think there was a realization that that just was going to take too long and they needed an immediate step. So where we are right now is we're calling it CARES Phase 3.5 or CARES Act 1.5. And that was what was considered yesterday on the Senate floor. There was a reference made by Dan before he left to $250 billion additional funding for the PPP. The Senate had put up a bill that would standalone provide that funding, and that's all it would do. The Democrats had their own proposal, and this is where I think it's important to note that, again, circling back with what Delaney mentioned earlier with the community banks. They had a $500 billion proposal, which had $250 billion for the PPP, and then also hospital funding and other emergency response funding. But interestingly, because the Democrats had received a letter from the Independent Community Bankers Association referencing this issue with the rural and community banks having trouble processing these loans and the pressures that it was putting on these areas that were in need of funding as everybody else, they directed that in their bill, $125 billion be specifically targeted towards rural and community banks, which is really important. And then in that, they would also direct the funding largely be considered for rural companies, minority-owned businesses, veteran-owned businesses. And so there was that kind of recognition of that need that exists. And unfortunately, when both bills were put up, this process called unanimous consent in the Senate, where one singular senator can block a bill from moving forward, the one senator blocked the one's bill and vice versa. So unfortunately, no action was taken yesterday. So kind of where we are right now in terms of negotiations on that, as we understand that the Minority Leader, Chuck Schumer, and Secretary Mnuchin of the Treasury are having discussions over the weekend and hope to have an agreement rather on that $250 billion next week. It likely will be somewhere in the middle. It will probably have some restrictions on the $250 billion use. And I'd be curious to see from Delaney her thoughts on how that could be helpful to the folks on the call, especially those in the rural areas and in need of these funding.
Is that a question?
Yeah, it is. I'm curious your thoughts on that. Sorry.
I know it's a big thought, so there's a lot of thoughts. I do think, I'm really glad to hear it, because as you heard, my concern ongoingly over the last couple of years is if we need to be factoring more policies with two-factor deployment for consideration of urban and rural instead of putting everything under one umbrella. And so I do really like that. Without knowing the specifics, it's hard to have a lot of comments, except I think preservation of the community banks is centrally important to the economic fabric and the sustainability of these places long term. If we lose our community banks, we certainly lose key functions of democracy, but these banks are really what make rural entrepreneurship possible, from that first $5,000 loan to, whether you're funding that venture off a HELOC, all those different things that community bank does. They also turn around and fund all the sporting events and the scholarships. So we know how critically important they are. So I think emphasis on how additional funding can continue to recognize that they're on the front line in these communities and serve them to that greatest extent so that they're empowered to serve their base well, I think it would be kind of the first order. I do think rural businesses will have additional challenges, especially if you look at some of the data coming out for increased risk for a lot of our rural recreation-based communities across the country in terms of tourism. So starting to break out some of those rural dynamics around what those different communities are, right? So are we looking at rural communities who are already suffering with shift in mining, and what are those dynamics and how could that funding help? Looking at a bucket for the rural recreation-based communities and starting to look at some of those qualifiers for rural to think about those variable dynamics for those communities. Because I think that's where the nuance will be and the demand for those businesses. Does that make sense?
That does make sense. I think you're absolutely right in the beginning, as the devil is in the details. And, we have not seen the specifics in terms of those restrictions. It's just been the leader and the House Speaker issued a statement and kind of outlined their priorities generally. And they did put out legislation, but I think that it's, again, as we've seen with implementation, obviously legislation is somewhat broad in terms of outlining the parameters. It's about how largely it's being implemented. So,
right.
So that totally makes sense. So I guess if I could just address one other issue and just get your thoughts on this as well. So, again, looking forward, so last night, I guess, yesterday morning, the Federal Reserve, through its funding under the CARES Act, through the Treasury Department's funding under the CARES Act, stood up a couple additional credit facilities. And one of them is called the Main Street Lending Program. And so for reference, and for those who are not familiar with that on the webinar, the Main Street Lending Program is for businesses that are mid-sized, and it's 500 to 10,000 employees. And it's made available for, you know, a variety of industries, but and there's certain restrictions on those. You can't have, according to the term sheets, more than $2.5 billion in revenue, and it's again less than between 500 to 10,000 employees. There's a few restrictions on those, but you know, that program again was propped up yesterday, and we expect a lot of activity there. So I encourage people on the webinar to take an additional look into that program. And Delaney, I guess for you again, I'm not sure if you're familiar with that, but if you have any suggestions to people as to, you know, what they might want to do in terms of, you know, looking at that and how they could take advantage of that for their businesses.
Yeah, I think the Main Street programs are incredibly important to go research and leverage. Especially, you know, a lot of concerns emerging in rural are some of the shifting behaviors that could emerge out of this isolation, with people already doing more online purchasing, and that the, you know, sort of the superstores or big box stores are continue to thrive while Main Street is shut down, and we'll have a harder time. So I think it's from the consumer side, having the same kind of patience and dedication to your Main Street as you do to your community banker, if you care about the future of your community. And then from the Main Street business side is really hustling to make use of all of those tools that are available to you.
Great. And I guess just really quickly, I know we're running out of time, but just to wrap up on it, one additional piece of this is the phase 5 of this plan in terms of recovery, and it's what's the actual economic recovery package. I mentioned this earlier, but they're going to begin to put together an infrastructure bill that will have a much broader policies included, from energy to direct financial support for industries that are struggling, like manufacturing, transportation, restaurants and malls, tourism. So, you know, I encourage those on the call that are in struggling industry to not hesitate to reach out to your members of Congress and make your concerns clear. Hearing from constituents, I can tell you from here, my position here in Washington is the most powerful thing. And you know, if they don't hear from you, they often assume that there's no problem. And so as they're beginning to shape this next economic recovery package, it will be important that they have feedback from their constituents. So please reach out to your members and to your senators and make your voices heard as to how they can be helpful to you.
So Delaney, I know you have some places that people can connect for some of those things too, and how your group is working really hard to connect to our members of government.
Yes, so Startup Colorado is working with a team of 12 agents across multiple agencies to deliver 4 consistent weekly calls for players at all levels of the playing field, right? So whether you're with Congress or SBA, all the way down to our regional representatives, you can access these calls to administer your critical updates. And then on terms of the business support organizations, EDOs and entrepreneurs, you have a consistent place every Friday for your region to access that information. So the calls happen every week, Friday from 12 to 4. The calls are 1 hour each, and they cover the Northeast, Southeast, Northwest, and Southwest. The calls also batch to YouTube live streams, so there is infinite attendance available. They're also immediately recorded to access at individual convenience, knowing that we're all managing a high call load. They are meant to be there long-term as a stable landing pad to ensure that everybody's getting critical information that they need. And also to just be consistent so that we have some things that we can rely on while we start to at least diminish the tiniest bit of our call demand, so that we have time to go solve for the problems we need to solve for. Because my critical concern coming into this 3 weeks ago was, how are we going to create space to start to get ahead of the next curve and the next curve and the next curve? So please join us, and please let us know if you have things you want to share there. Go ahead, Cole.
So Brandon, just one question before we wrap up. I think, you know, if you watch any news, you'd think that Washington's completely dysfunctional and no one's talking to each other. And in fact, that's quite the opposite. Just wanted to invite your comment on how Capitol Hill is functioning, how bipartisanship is working on these issues, because I think that the media focuses on dysfunction, but there's frankly a lot of good things happening on the Hill right now.
Yeah, you know, I've been amazed at how people have been able to come together, even if they're not actually physically together. It's been a very good, positive experience. So basically, in terms of the actual speaking to people, there's very few people that are actually present on the Hill. So the members, some members in leadership, some key staff, but there's a lot of behind the scenes communication from, you know, the staff that run the committees, the staff that work with the leadership, the actual members of Congress themselves, ongoing conference calls. And, you know, again, I think you saw with the passage of the CARES Act, that bill, there was a lot of negotiation behind the scenes. And you do hear, as you mentioned, a lot of the negativity and people blaming one another publicly. But there was a lot of negotiation behind the scenes and a willingness on both sides to include pieces of policy that they just fundamentally disagreed with, to come together for a bill that they thought would be for the betterment of all of America and help in, you know, a time like we've never really seen before in our life. So people are working closely, and, you know, again, I'll go back to what I said earlier in terms of submitting ideas. I am on conference calls 10 times every day for the past month with members of Congress and their staff, trying to make them aware of issues, because they really do want to get the feedback from people out there of what's happening on the front lines and how they can be helpful. So I can just emphasize again, you know, we here work with people, our clients, all the time to make their voices heard in Washington. And, you know, again, it's helpful to hear from constituents so that they can have a basis for their discussions and negotiations in Washington.
Brandon, that's super important. And I know a lot of people on calls like this, with an emphasis on rural America, are going to be in agribusiness or touched by agribusiness. And, you know, I don't think there was a dollar in the CARES Act for USDA programming. So, you know, they are going to be asking questions as we move forward from the response and into the recovery phase. What does that mean for the programs that I usually take advantage of or I'm familiar with in the USDA programming or other rural types of programs that are out there? So I think your point is, it couldn't be more timely for people to reach out to their congressional offices and tell them, you know, here's where I fit. If you're a small ranch or farm, Cole and I know many of these. In fact, our own families are involved in some of these operations. You may not have very much need for payroll assistance, but you do definitely have issues with the commodities markets that are out there. I mean, if you look across the futures indexes for all the agricultural, whether it's corn or beef, it doesn't matter. Everybody's taking a beating. For some reason, wheat is doing okay. Maybe that's because we're all baking bread at home now, but
Probably true.
But everybody else is having a hard time. So agribusiness is going to need to be a really something that is a focus for subsequent bills and legislation. And I know the people that are listening and tuning into this feel that firsthand. So I guess more of a comment than a question, but thank you for imploring people to get in touch with their members.
Yeah, thanks for mentioning that, James. It was in my notes that agriculture is a gap that we have right now, certainly in terms of just resources in general for the special needs of that industry. I think something additionally to consider is we have a lot of you know, farmers and ranchers experimenting already and taking risks to experiment as they bridge into the hemp industry. So with that additional risk kind of in their portfolio, how is their stability looking sort of midterm and long term right now?
Well, I appreciate everybody, I mean, being on this call today and getting Dan Nordberg from the SBA on. I've made a lot of notes. I will get this link out to you to all of you probably on Monday as we have it done. And I'll also do some email introductions for all of you. And is there any final closing thoughts that, I appreciate the discussion on rural Colorado and community banks and agriculture, because these are places we just can't forget. And we know it has to come from urban first, because we have to get these policies in place so we can push them out to rural. But any closing remarks before we end this call?
You know, I know there are not a lot of fans of maybe outlets like media outlets like the New York Times in rural parts of the country, my own family included, but they have a really interesting article that chronicles the rural contraction of COVID and how it spread into rural counties really rapidly and unexpectedly, frankly. Even from epidemiology standpoints, they are looking at something that's unprecedented and really wasn't forecast. So if you look at the map of the US and just at the counties that are rural in nature that don't have an urban center, there are hospitals that are sometimes having to close in the midst of all this, which is completely what we don't want to see happen because they aren't able to maintain revenues that come in from the typical things, the bills in those hospitals. And so to have hospitals closing in rural America when they're just now getting that front edge of the wave of this crisis is something we've all got to put our heads together around and figure out, because we can't have our friends, relatives in these communities take that kind of hit with us laying down.
Good.
Greg, I just wanted in closing just to say thank you for the opportunity for dialogue. And I think the important point for a lot of us is we're communicating and collaborating in new ways. We're not meeting face to face. We're doing a lot of conferences just like this, but collaboration and communication has never been more important with partners, with bankers, with elected officials. Communication's critical, and it's important that we share ideas and try to collaborate and work together because we truly are in this together.
Well, thank you, everybody. Delaney, you want to add a couple more points there? No, one thing I want to say is Delaney's in a mix of a closed county right now. When you talk about rural, what's happened to this, she is in the middle of living with that, James, right now. It's closed, and I know that it's got to be very hard on the community, and she's right in the middle of understanding what that's all about.
We have experienced all of the layers and of dimension of this moment in time, no doubt. But it's bigger than all of us. So the sentiment about collaboration is really important. My team, to the extent that we were already collaborative before this, are grateful for the relationships we have and the ability to do those things. We definitely have moments where we have to put on our big girl boots, quote unquote, and remember that collaboration is hard. I think one of my messages to myself every day and kind of for humanity is to remember to trust our adaptive capacity as human beings. And that we're, inherently, ingenuous and innovative, and we have to really dig into that right now. And that's something that we're studying that we can help from our perspective at Startup Colorado. Really quickly, the main thing I wanted to share was that I'm terrible at elevator pitches always. And so when I talk about the regional calls, I forgot to give you the website. So I put it in the chat there, and you can go to startupcolorado.org for the actual details. So thank you.
And I will send that out. We'll have it out as a link for everybody to learn more about that. Thank you, Delaney. Brandon, I really appreciate you and your guidance. And I know there's probably many late nights that you're reading through. I imagine it's very somewhat dry documentation also that you're sitting there. So thank you so much for all that you're doing. Any closing words on you want to say?
No, I'm happy to do it. It's a very uncertain time for the country, but happy to be a part of trying to do what we can to respond and make things better again. So again, encourage you to reach out to your members of Congress, and appreciate the time today.
All right. Well, with that, our show is at a close, and another GROWL Virtual Connex panel discussion. We will have this out. We'll have these and more. You can check out growlagency.com/Connex.